Well, welcome back, everybody. My name is Marc Rogers, and you are tuned into the Prospect, Produce, Prosper podcast. And with me is my longtime good buddy, dude. It feels like time like never went away, bro. Like I saw you yesterday.
Yep.
We were doing dinner seminars together in Monterey and Carmel. Yeah, and now here we are, Scottsdale, Arizona,
Talking about it, reflecting on it. Does that mean we're old?
You are.
Thank you.
You're welcome.
I wear the hair for it.
That's right. That's right.
By the way, I want you to know your hair looks great, and you are my hair icon.
Yeah. Well, I got that going for me,
Which is nice.
Bryce has got. I'm so excited for you to be able to be here today because we got a lot to talk about. There's a lot going on in the market.
Mm-hmm.
People are uncertain.
Yep.
And on top of people being uncertain, people are ready to have this wealth transfer take place. Largest wealth transfer that we've probably ever seen in the United States.
Yeah, without a doubt.
And this podcast is really built for advisors to capture those ideas. Like in my mind, we go to these industry events, we listen to the speakers that are at these conferences and things, and you're always like trying to take one nugget away.
Yeah.
It's like, what's that nugget that you're going to then implement in your business to help your business grow?
Right.
And what we're talking about today, I think, is something that every advisor can, one, benefit from immediately.
Yeah.
Two, hook onto a process. Most advisors really struggle with process, right?
I would agree. Yeah.
And so this can be an anchor tenet to your marketing, to your process, and give you a track to run on.
Yeah.
And so kind of catch everybody up on what you're doing these days and what we're talking about.
I mean, if you want one nugget, this is the nugget.
Listen up.
It's a big nugget. And I tell you, first of all, it's so good to be here. So, I'm really impressed with everything that you've done with this place, the office here and your team. And it's fantastic. And I remember, back to doing seminars back in Monterey years ago and helping me and Mark build our business. So much of this is what you were talking about. And the fact that you brought it to life and put your vision and focused on it and made it your own. I know that all the reps that you work with now, because I was one of them, are benefiting from it greatly. And you bring up a really good point that the benefit is being able to have a process that works, a repeatable process that works. And, as you know, and a lot of our time personally with connecting on, I used to carry the bag. I used to wholesale annuities. And I had the perspective of calling on a lot of amazing advisors who were extremely successful. And a lot of them, they were either asset gatherers or they were asset managers. I probably have seen some of the best in both of them. But regardless of which one, the best always have a process. And I think the hardest thing about this business is building that process.
Yep.
And the fact that you have brought that to the advisory world in not only being able to build a brand, being able to grow that brand through the different, avenues that you've done through the digital marketing, the drip, the seminar, the education, the financial community is only better for it. And I'm living proof of it. And, the first half of my career was carrying the bag and helping advisors grow their business. And the second half was being an advisor myself. And, you were a big part of our growth and being able to do dinner seminars and really hone in on that, what the client is looking for, and that was all about income, retirement planning. And you touched on it before, is the biggest opportunity I think right now is for all those clients, all those baby boomers who have been owning businesses, built their wealth up over businesses, built their wealth up through real estate. They're now coming to this decision. You said uncertainty. I think we focus so much on, the community focuses on uncertainty with respect to the market, the volatility of the market.
Yep.
I think, which is a bigger uncertainty, is to those people and the options that they have, because I think they see their options as very limited. If you're a business owner and you've been, built it up over 20, 30 years, I think most business owners, their first place they look for exit is within their family. And I think over the especially last 5 to 10 years, that's not as much of an option. You know, their kids are not there to step in. They've moved away. You know, in our situation, living in California for as long as we do, and now I live in Charlotte. You know, the kids were raised and now they live on the other side. So the family is not an option. Well, what we did and what we built our business on was something called the Deferred Sales Trust, which is a way in which business owners and real estate owners of anything that is highly appreciated can sell a business or this asset and defer 100% of the capital gains and then retire off of those assets, the income that they can generate. And being able to save the 20, 30, sometimes 40% in taxes, it makes the difference of one, actually selling it, two, obviously the amount that they put in their pocket, and three, being able to have a smooth transition because you're not having to deal with those taxes and giving all the wonderment of taking one asset and being able to then sell it, defer the taxes, and then, you know, create diversification and flexibility and liquidity. I think the opportunity right now is massive.
So for the advisors listening,
Yeah.
you know, this seems daunting, and we all kind of have our process. We're kind of stuck in our way, right? We know when an investor comes in, you got the 1, 2, 3 story. Here are the things that I like to talk about, you know, address those needs, and then give somebody call to action. With that, how does one get involved into the deferred sales trust? Is there kind of how do people learn?
Yeah.
And then how do they implement it?
Great question. So first thing is the Deferred Sales Trust, and because we're talking about taxes, is a trademark name. You're not going to find it in the tax code. So I think people listening is like, don't start going into the tax code looking for that. The thing that allows us to do this, if they are going to tax, is tax code 453, and I'll talk about that later. But to get involved, first thing is the owner of the Deferred Sales Trust is Bob Binkley and the estate planning team. Him and Todd Campbell brought it to market about 24 years ago.
Okay.
And they, you know, Bob himself is a producer. He's an advisor, extremely successful. And really, I mean, just a sharp businessman. And then Todd Campbell, who's a tax attorney who had been doing this at one of the large accounting firms for years. You know, they brought it to the retail public for this very reason. And so what you have to first do is you have to get involved with us because as of right now, I'm responsible for the marketing and sales of the Deferred Sales Trust within the advisory community. So doing the education, teaching them the application, case management, and the marketing runs all through me. But we first have to go through training, get them established so they understand what the Deferred Sales Trust is. That does not mean that we're going to feel like they got to be trained and now all of a sudden you're on your own. In fact, quite the opposite. A lot of hand holding. I like to think of they're just on the advisors is in the sidecar going along for the ride. But we have to engage with estate planning team, engage with myself so that you're trained and we can customize some marketing material for you. We get a website so you can either gather clients. We'll do illustrations and then start the case design process. And once we get going, then we're going to start building out, you know, along with all the things that you guys provide in the digital marketing space, is ways to market this within their market, you know, and getting centers of influence like CPAs, tax attorneys, real estate attorneys, and real estate brokers, how you can get to them to start referring business to you. But first step is to reach out to us, get us engaged, and let us train you up and build a plan for you to execute.
What I love is, you know, once you get the flow of this going on,
Right.
it really sounds like it's a done for you process.
Definitely.
You're not going out as an advisor. I'm always thinking like, okay, how much staff am I going to need for this? What the resources? How am I going to do this the right way to really beef it up?
Right.
It sounds like you guys got to kind of handle too.
You don't have to add any staff. That's you're bringing us on as the experts. We're going to execute everything for you. We will never put you in a position where you feel like you have to explain something to a client. You have to go through any of the tech. We do everything for you. We will profile the client. We will do the education with the client, teach them how it works, go through the planning process, figuring out, great, you're going to sell the business. Now we're going to use the trust. How much income do we need to generate for you? Just like any financial planning conversation, we'll do that for you. We'll do the administrative stuff. So the documentation, we'll create the trust, go get the EIN for you, at no cost. I'll give you an example of how scalable this is really quickly. Okay. So if you think about it, and this is really common, and we're in Scottsdale, and I don't think we're very far from Camelback, are we?
Nope. Oh, you can see it out the mountain.
Oh, cool.
Right there.
So
out the window.
So think of it this, and this is a common situation that's going on all over the country, is you got mom and dad who 20, 30 years ago, they bought the family house for, let's just say, $500,000.
Okay.
And now they've raised their kids, they're empty nesters, they're 60, 65 years old, the primary residence. And now that $500,000 home is worth $3 million. Okay. Well, now they're going to downsize. They want to move closer to their kids, or really their grandkids, right? Is move closer to the grandkids or get out of the cold and move wherever they're going. It's a pretty common event for people to retire, to either relocate or downsize, but on all situations, it involves them leaving their primary home. So in that situation, what we will do is introduce the client to us. You got a client who bought a home 20 years ago for $500,000. They're gonna sell it for about $3 million. It's their primary home, so when they sell, they're gonna get the 121 exemption. A married couple each get $250,000. So their basis now is the $500 from the original purchase price and $500 from the exemption, $1 million. They're gonna have a $2 million taxable gain. Roughly, probably gonna pay a minimum $600,000-$700,000 in taxes, right? So bring the client to us. We're going to do all of the education. The first phone call is going to be with the client, kind of run through the idea of them, make sure they have the concept down, make sure it's applicable. I'll check all the data and make sure that is there any mortgage? Has there been any improvements? Make sure what the real taxable gain is. And once we get that and make sure it's appropriate, then what we're going to do is we're going to have a second call. But on that second call, I'm going to have the real estate broker who's selling the home. I'm going to have the CPA of the client who's been doing their taxes for years, and I'm going to have their attorney, their family attorney. Now, it could be a real estate attorney, it could be an estate plan, it could be anybody, but it's their attorney. We're going to run through the transaction. We're going to share with, hey, the real estate agent is still going to go out and find a buyer for the home. They're going to sell it for $3 million. The way in which the transaction works is that when the sale goes through, the seller is actually selling it to their trust. It's a third-party trust with a third-party trustee, and then at the same time, they're going to turn around and sell the trust is going to sell the property to the business or to the buyer. So it's called a double escrow simultaneous close, very common in land business, land transactions. But now the $3 million is in the trust, and because it's in a third-party trust, it's considered an arm's length transaction, so there's no taxes due. But now the client goes, or the seller says, hey, how do I get my money? So what we're going to do is we're going to write a 10-year note. That note is going to generate income, 3, 4, 5, 6%, from it for them to retire on. That's where the planning comes in. We're also going to go through a risk tolerance to make sure that the money inside the trust is allocated. And that's the best thing about this is that the advisor is now managing that $3 million. $3 million that they wouldn't otherwise manage.
Yeah, that's right.
Right? And that's where you're doing the annuities, you're doing income planning. A lot of times it involves insurance because, we've got some taxes potentially due on death, or some just family planning, legacy planning. But then once we get the plan and all the allocation, now we're gonna explain this to all three of the CPA, the real estate attorney, and the real estate broker, because one, I want to make sure everyone's on the same page. That we're not doing anything out of compliance or what have you. I like to have everybody involved in transparency. But the second and really the biggest reason is once we get through the explanation and make sure that all the questions are asked and answered, we're going to turn and say to the real estate agent and to the real estate attorney or whoever the attorney is, and the CPA is, my guess is is that you probably have a number of clients very much like this couple from Camelback. They're in the very same situation every time. They all turn to their file cabinet and say, "Yeah, I got a lot of them." So you think about it, with one client that's been under your nose a lot of times for years, creates 12, 16 transactions by simply having 1 to 2 conversations with centers of influence.
It's awesome.
Yeah.
I mean, my ears are perking up to just think about, we're always, as advisors, we're trying to break into those other professionals, and it's so hard. It's so hard.
Oh, yeah.
To get that CPA that doesn't know you, to get them to be trusting of you and the work that you do, one, and then number two, start to refer you or favorably introduce you to new people.
Definitely.
And so, the CPA, the attorney, the insurance, the individual, the realtor, all these people are so involved. Talk about a great show and tell to those potential CPAs, attorneys, and other professionals that you're trying to break into. You kind of get a free opportunity to sit down and say, look at the type of planning that we're doing here.
Right.
That's a different story. That's a difference maker, that another advisor is not just showing up, knocking on their door and saying, let's go to lunch and how many people can you refer me?
Right.
You're adding so much value. And that's really what those other professionals want to know and trust and actually see is, what do you do for somebody, and can you deliver?
Right.
Can you deliver on that? Don't make the CPA or attorney look bad or things like that.
Right.
But do you have a story that makes you different and stand out? This could be that.
Oh, without a doubt. And I think, everybody's looking for something to be different.
Yeah.
Right. How do you stand out? How do you make a difference? And this is a huge difference maker. That's also why I like reaching out to them and extending that offer to be included in the education. It's just building trust with them and making them aware that, like, first of all, this comes up is because we're dealing with taxes. I think the first gut reaction of CPA is that we're competing. Now we want to do their tax return. We're going to take it. No,
You keep doing that.
no, we want them to keep doing that. We want them to be their tax. We're not the compliance. All we're doing is this one transaction, which, by the way, all it is a K1. So we'll give the CPA, which is, that's one of the questions that comes up is like, how do you report it? But in terms of really making a difference in a client, and obviously then, like, particularly the CPA, huge difference because it's real value. And they're not very familiar with this. And this isn't anything about CPAs. Is their world is really hard because so much is focused on compliance, getting the numbers in the boxes. This is an advanced planning strategy and tactic that a lot of CPAs come to us with situations to carry out for them, which I think that's like the ultimate compliment when they're bringing them directly to us.
No doubt. Oh, yeah. And again, I think that the value is that the advisor doesn't have to be alone. They don't have to navigate it to figure it out. It's like, and I think that brings strength to the table, that when you guys are stepping up and saying, hey, we're shoulder to shoulder with you on this thing all the way through to the finish.
Right.
That brings stability to the entire situation. And makes you get comfortable, makes you want to do more of these.
100%. And it's so funny with the consistency and the predictability of the process of this also comes flexibility, because I think a couple of questions come up. First is, okay, if I'm selling a business, do all the monies have to go into the trust? No. Same thing with the example we said, Camelback couple is like, they're downsizing. What if they need money for the next leg of the transaction, for the next home? We can structure that. Not all of the money needs to go in there. I'll tell you, the best part of doing this, well, there's two parts. One is the amount of time that you get to spend with business owners. I know you as a business owner, myself as a business owner, a lot of the people who are listening to this are business owners. We have a different energy and spirit. I think business owners attract business owners, right? So it's extremely gratifying working with them. Second of all is we get to say yes a lot. What I mean by that is I say, if I'm sitting down with you and say, tell me what you want this to do for you. Tell me what this money is for. You draw the picture. we're just the one who's going to bring it to life. We get to say yes a lot. You want some of the money and defer all of it, the rest of it, go ahead. You want to do some charitable planning and put some rest of in the deferral, we can do that as well. Like, you draw the picture, we get to say yes and bring it to life for you.
That's awesome.
Yeah.
See a need, fill a need. I think that this is something that I like to say to advisors. This is another club in the bag.
It is.
And you can make this, I heard Mark Williams, your partner, call it a hybrid club. It's like there's so many different aspects that this can open up doors to all those other different parts of financial planning and insurance, and all those things that if you just learn the process and owned it, then you'll be more comfortable. Then you're gonna just rinse and repeat. And so that's why I'm excited to partner with you, because gosh, man, no better person than to really understand when you work with a peer, somebody that's sat on the other side of the table, that makes a difference. And I know that you bring a lot of how many times you've been at the table with investors and coaching advisors on what to say and how to say it, and making sure that they're fully educated on what they're saying.
Right.
Those things matter. So if somebody wants to get a hold of you, they want to reach out to talk about the DST, how they add it into their practice, how do they do that?
The easiest way is send me a text on my cell phone or give me a call at 215-901-7278.
Bryce Hamilton.
Yes, sir.
Let's go, baby.
You got it, buddy.
Hey, thanks for being on. More to come.
Yeah, I love it. Thanks for having me, buddy.